Hey, welcome back everybody. My name's Austin. Today I want to share with you the real reason Bitcoin is going up through a series of charts, both fundamental and technical, so that you have all the information you need as a crypto investor. Smash the like button to support me, tells me that you like this content, and let's jump in with one of the biggest reasons Bitcoin breaks above $21,000 for a very brief time as short liquidations hit over 725 million. So most other channels won't share this with you. I will. That some of this pump, yes, was caused by natural buy pressure, which we like to see, but much of this pump was caused by manipulation to the upside. Short traders who are betting that the price will go down, instead the price starts to go up, they get liquidated, pushing the price higher. A series of cascading short liquidations. That was over 133,000 traders being liquidated. That's hundreds of thousands of bears being wrecked. As of 7:20 a.m. Eastern Time today, total liquidations stood in the 700 millions, with the largest single 24-hour liquidation of 6.8 million happening on crypto exchange Huobi. And it wasn't just the short sellers for Bitcoin being liquidated. Across the different digital assets, Ethereum actually had the most liquidations, pushing the price up in the past 24 hours of nearly 260 million, while Bitcoin's rally had about 239 million shorts liquidated. And maybe you're asking, why now? After months and months and months of downside, why now would we get this sudden pop? Well, something that this channel had been reporting to you since last year, that over 66% of the total Bitcoin supply hasn't moved in the last 1 year, setting a record, meaning more and more of an illiquid market. And as mentioned yesterday by Caitlin Long, don't forget, illiquid markets are easier for manipulators to manipulate than liquid markets. No clue if this rally is sustainable, but be careful. Lots of leverage still to be liquidated based on publicly available info, and many people have incentives to pump price short term. For further reading on how this stuff works, Caitlin recommends to check out the book When Money Dies by Adam Ferguson to learn about short covering rallies that faded and broke hearts. But an illiquid market doesn't mean necessarily that Bitcoin's going to shoot up or break down, but it does mean when Bitcoin eventually does move in either direction, it's going to be big, and the market's just easier for manipulators to manipulate. Let's look at some fundamental, then technical charts and talk about, is this rally sustainable? And if you're interested in learning more about cryptocurrency, we drop a video every single day, keeping you informed. But what about the fundamentals? Bitcoin is now trading back above its cost basis, meaning realized price, for the first time in months. In other words, in aggregate, the market is no longer underwater at the moment. What the hell does that mean? Well, looking at this chart, we can see the black is obviously Bitcoin's price over the years. The orange is Bitcoin's MBRV metric, essentially telling us if the Bitcoin network is overvalued or undervalued. And let's talk about why many analysts use this as sort of a more accurate way to determine the value of Bitcoin. MBRV Z-score is a Bitcoin chart that uses blockchain analysis to identify periods where Bitcoin is extremely over or undervalued relative to its fair value. And to determine this, we're going to use Bitcoin's market cap, its realized cap, and then standard deviation. As you can see right here, this black, like I mentioned, not Bitcoin's price, but actually Bitcoin's market cap over the years, very familiar. The blue line represents Bitcoin's realized value. We'll talk about that. And then, of course, we have the Z-score, which is the metric we're using. So understanding these three metrics. First of all, market value, i.e. market cap. This says blue line. It's actually in the black right here. See, realized cap's in blue, market cap's in black. Market cap, pretty self-explanatory. It is the current price of Bitcoin multiplied by the number of coins in circulation, i.e. market cap in traditional markets, i.e. share price multiplied by the number of shares. Pretty self-explanatory. Market cap, you get it, we know it. It's realized value as opposed to market value that to me is the more accurate indicator. So rather than taking the current price of Bitcoin, realized value takes the price of each Bitcoin when they last moved, i.e. the last time it was sent from one wallet to another. So the last price that each of those last Bitcoins moved. It then adds up all those individual prices and takes an average of them, and then multiplies that average by the total number of coins in circulation. That's why many people say that they prefer realized cap over market cap, a little bit more specific. And it looks like both market cap and realized cap pretty similar right now. And again, why people value this metric, realized value. In doing so, it strips out the short-term market sentiment, and it can therefore be seen as a more true long-term measure. And then of course, third but not least, Z-score. That's basically a standard deviation test that pulls out the extremes in the data between market value and realized value. How this affects you, we can see when Bitcoin's MVRV metric, this orange, was peaking, Bitcoin's value, Bitcoin's market cap was peaking as well. In bear markets, this metric bottomed out. Same in the bull of 2017 and the bear of 2018. Now it's interesting, back in the bull of 2021, we didn't really get the same blow off top in price or this metric like we'd seen prior. Yet we are getting in a similar bottoming range, again, based on Bitcoin's realized value. Again, what this means to you, Bitcoin is now trading back above its cost basis realized price for the first time in months. In other words, in aggregate, the market is no longer underwater at the moment. And as we know, all markets are cyclical. There's always a sense of euphoria at the top, denial on the way down, maybe panic. Have we reached that capitulation? A period of no movement, depression, and then of course, disbelief. This couldn't be a real pump. This is obviously a sucker's rally. This couldn't be a real rally. Well, matching up Bitcoin's current price over the last few years, laying it over the market cycle chart, damn, pretty remarkable how cyclical, how similar this Bitcoin market seems to be. I would be interested to hear your thoughts on this down below. How much weight do you put in to cyclical markets like this? I personally haven't made up my mind yet. Are we in the disbelief stage? Do we still have further downside to go? Truly nobody knows, but what do you think down below? And jumping off that and understanding the cyclical nature of markets, especially Bitcoin's 4-year cycle, let's take a look at Bitcoin in 2015, Bitcoin in 2019, and 2023, all 2 years after Bitcoin tops. Because we know Bitcoin topped in 2013, it topped infamously in 2017, in 2021, all these are 2 years after. BTC year-to-date ROI, 2015 in the pink. Yes, we had an early capitulation event, chop solidation, but we finished the year up. In 2019, this bluish purple, we had some sideways action, but again, the year trended up. This was 2 years after the top and 1 year after the bear of 2018. And right now, in 2023, damn, we're popping. Again, past performance does not guarantee by any means future performance. I just bring you the charts so you have all the information so you can make your own decision. And the biggest reason to me that this would stay the same this year is because Bitcoin does go through those 4-year cycles, meaning its supply faucet, the amount of coins being mined into circulation, gets cut in half every 4 years. So that's incentive why we would see something similar, yet a big reason why we wouldn't, why this time's not the same. Because Bitcoin has only known inflationary times, quantitative easing, money in the system, and then of course in 2022, for the first time ever for Bitcoin, the Fed is actively trying to taper inflation. They're going for deflation. They're raising rates aggressively. Bitcoin has never existed in this type of hawkishness for this prolonged amount of time from the Fed. And then of course, looking at basic technical analysis, answering the question, is this rally sustainable? Well, we can look at a key metric, Bitcoin's 200-day moving average. We can see in bear markets, Bitcoin's price is usually below, often gets rejected off of Bitcoin's 200 MA. In bull markets, it often rides above. Sometimes we do have a back and forth, so it's not perfect. But back in 2020, after Bitcoin crossed and confirmed that cross above the 200 MA, that was confirmed bull market. And back in 2018, after we had that confirmation below the 200 MA, that was a confirmed bear market. Zooming in to where we are today with this last pump, yes, we're above it. That's bullish. Now, of course, this is no confirmation yet. I'll keep my eye on this. I'll keep watching. And then, of course, Some people actually prefer the 200-week moving average. Many analysts hold that in a much higher regard. Here is a bigger picture of Bitcoin's 200 weekly MA. And of course, that's sitting around a $25,000 Bitcoin. Hit the like button if you got value today. And like always, see you tomorrow.